Hey there, welcome to another episode of Living in Northern California. Today we're going to break down a certain topic, and that's going to be what programs are out there for down payment assistance,
Yeah.
right?
And also the myth about putting 20% down, just kind of talking about the different options people have available to them to get into a home.
Let's do it. If you have not yet, make sure you send a little love to that subscribe button. Hit that notification button so you can be the first to know what's going on here in Northern California. All right, let's get started.
Yeah.
Rose,
Okay.
you have a background in lending, right?
Yes.
You were a lender for like 50 years, right?
50.
Something like that. How long were you in lending?
Probably about 12, 13 years. So I was a lender for Wells Fargo and then worked as a broker for another company after that. So I learned a lot of things, doing that.
You've been in this industry since
I was a baby.
Yeah. I met her when she was 12, I was 13. We used to go to her mom's brokerage. Her mom was a realtor, was a broker, ERA in Newark, California.
Yep.
And we used to hang out at the office.
Yeah.
So you've been around this a long time.
Yeah. My mom used to have us cold calling people in the bathroom down the yellow pages.
That's just crazy.
Yeah. Something I definitely wouldn't do now.
You don't even, yeah. So what do we want to talk about? There's programs out there for people that need help on down payment?
Yeah, right. So I mean, there's a lot of programs available out there. I mean, obviously everyone's hearing about the Dream for All program, but that's kind of something that is, I don't know, I want to say short-lived. There's only so much money for people on that program, and they, like last time it came out, there was only it was only for 9 days and they ran out of funds. But they are changing things on that, where there's a little bit more restrictions. It's a lottery system. If your parents are homeowners, you don't qualify. So there's a lot of stuff going on with that.
Well, with the Dream for All program, and you guys could look at previous videos, look up Dream for All on our channel. We go more into detail with it. But, a lot of first-time home buyers, they don't know the programs that are out there, but then Dream was kind of out there. A lot of people heard about this and didn't realize there's other programs than the Dream. And so a lot of people put their eggs in that basket thinking the Dream program, this is my way to get a home. This is my way to get down some down payment so I could get a home, right? Mm-hmm. And it was gone in 3 weeks. Yeah. So it's coming back, right? As of this video, we're in March and it's supposedly coming in about a month, next month, right? Mm-hmm. And we don't know how long those funds are gonna last. Yeah. But that's not the only program. There are other programs out there. Dream could be one, and there's other programs, right?
So CalHFA has a 3.5% down. Bank of America even has a program. I don't know a lot about it, but there are first-time homebuyer programs. So basically, these are programs where they will let you borrow a certain amount of down, usually between around 3 to 3.5%. And then it goes on your deed of trust, which is something that, kind of holds title of the house. But you don't make payments on them. They even have some where, when you refinance or sell, you have to pay it back. And then they have some where after you've lived there for so many years, it gets forgiven. So there's a ton of options available out there. But on top of that, I hear a lot of people saying that, they're not ready to buy right now. I need to save money. We're trying to do 20% down because we don't want to pay mortgage insurance. So that's actually one of the topics I wanted to talk about today because, like if you're someone trying to save 20% down and how long is that going to take you, the longer you wait to get into the market, the higher prices are going. Right? And so 2 to 3 years from now, you're still trying to save that money, that 20% that you're trying to save could have given you like 50, 60, $100,000 in equity, right? And
when
then
mortgage insurance would be a little bit over $100 a month.
And then when does it fall off? Like on a conventional loan.
Yeah.
So on a conventional loan, when you gain that 20% equity, you can call your mortgage company and be
they'll
like,
take it
hey,
off.
yeah, exactly. So, we just want to bring that
So let's
awareness.
just kind of break that down a little bit more. So I can't come up with 20% down. I could come up with 5, 3.5, 10, whatever it is. And if it's under 20%, you will have mortgage insurance, right? And that is every, it's not a set number, but depending on the price, it's about $100,
Yeah.
a little bit more than $100, right? And you have that. And as soon as you gain enough equity, which 2024 house prices are already going up, right? 2023 was a little bit of a pullback. And if interest rates go down, they're going to continue to rise, right? And we're in California, one of the fastest growing areas in the nation. Prices are going to be going up. Once we get 20% equity, which could be pretty quick, call the bank. I have the equity. I'd like to remove my mortgage insurance.
Yeah.
So there, I was able to put 3.5%, 5% down. If I had extra money, save that money for reserves, right? Because obviously mortgage is going to be more expensive than rent almost all the time, which is okay, right? Because we're buying down our principal and gaining equity that way too.
Yep.
And that's a great way to save money for reserves. And then we get 20% equity, call the bank. They remove that PMI. So you only had to come up with 5, 10%, whatever you choose, 3.5 on the lowest.
Yeah.
Unless you're a VA, then
Right.
it's 0, right?
Yeah.
And that's a great tool.
Yeah, it is. It is. And, so there's a lot of things
So let's
out
say
there,
it's 2
like-
years, right?
Right.
That's
Yeah.
you're not putting out anything for PMI.
But like you're gaining equity as you're living in the home, right? So you have the potential to drop your mortgage insurance when you have the 20%. You're building equity in that long run versus waiting and waiting to get the 20%. You're paying 100% interest to your landlord. You're paying down their mortgage, right? So it's just, a lot of people don't know the different options and how it looks like. They just see a number that says, oh, mortgage insurance, I don't want to pay for that. But why? So,
And hey, if you're looking in California, in the Sacramento region, the Bay Area, and you're looking for a crash, listen, we are around thousands and thousands of homes being built right now, and they're being sold. Prices are keep going up. That's just the tip. If interest rates come back down to the low 6s, the high 5s.
And that's another thing too, right? So on top of saving money and then waiting for interest rates to go down, there's a lot of missed opportunities, right? Yeah. So builders are giving incentives right now where you can actually buy down your rate. So it's like as you're sitting on the sidelines waiting for that perfect time, you're actually missing a lot more opportunity. Yeah. So what you don't know, you don't know. So that's why we create these videos to help share some information about what we know, because we're out there helping families every day. And, they're like, oh, I didn't know that. Wow. And so, we want to give this information to you guys because there are opportunities out there right now. We have clients getting into homes for 5% down. We have clients getting into homes with, mid 500 or mid 5% interest rates, right? So they're there. You just need to know the resources to find them.
I love it. So what if there's someone watching this video right now and they want more information, right? Because obviously we're not going to break down all the programs there are. It'd be good to possibly hop on a call. Who would they call? Us, the lenders. I mean, yeah.
Well, so, obviously, like we would connect you with the lenders, but reaching out to us and talking about these different, things available. We want to know what your situation is so that we can guide you to the right people. Not all lenders are created equal. Not all realtors are created equal. So, we want to make sure we talk to you, really understand what you're looking for, and that way we could, help you guys out and direct you in the right path.
I love it.
All right, you guys. So if you found this video helpful, we'd love to hear from you. And don't forget to give a little love to that subscribe button, and we'll catch you on the next video. Bye.
See ya.